My name is Frederic Huynen. I'm a partner at HPE Growth, and we're focused on the European growth stage landscape of investing within the technology segment, focused across fintech, software, digital health, and climate tech opportunities. When we look at the current market opportunity, we really see a very steady and strong growing pipeline of opportunities coming up within the growth stage segment of the market. And that is really driven by two important drivers. One of them is the continuous inflow of innovation. When we look at the numbers, last year we saw roughly 6,000 early stage deals taking place in Europe, which is roughly 1,900 deals more than compared to 10 years ago, and represents roughly 48% growth in the deal volume for the early stage. When we compare that, particularly with the US, we saw there only a 17% growth rate taking place. So that's the first driver. The second driver is really the rapid expansion of human capital across the European markets, whereby this is driven by a larger and strong growing cohorts of founders that have been involved in unicorn technology companies and that are currently in their second or third wave of founding their companies again. In addition to that, we see a pretty strong increase across the European workforce within the technology segment, and this again creates a flying wheel for a bit of an MBA of entrepreneurship, of working and starting new businesses within the technology segment. The European market for growth is particularly attractive because of the way that companies are being grown in a very capital efficient and sustainable way. The second opportunity there is really around the competitive landscape. When we compare the cumulative new fund counts versus, let's say, the US versus Europe, we see that roughly 2.8 times of dry powder is available in the US for technology investments compared to Europe. So that makes Europe underfunded to some extent. When we particularly focus on 2023, we see roughly that 17.4 times the number of early stage deal coverage per new fund launched in Europe, which compares to a much lower multiple in the US of roughly 7.7 times. The ecosystem of local investors is growing in Europe due to the continuous inflow of, let's say, high academic training centers, so becoming increasingly important within the ecosystem. A more maturing ecosystem of the entire value chain, so ranging from seed, Series A, Series B, and so on. And we saw, of course, over the last number of years, a pretty strong influx from US capital into the European markets. That has come down quite a bit and is particularly driven by let's say, specialized investors in this segment. So the specialized investors across the European markets continue to take more market share within the deal opportunity for tech stage growth opportunities. You see more within the early stages, all the way towards the Series B segment. You see more European, let's say, local investors taking that market position. Particularly in the, let's say, sub 50 million size range. And growth businesses is hard. That means that companies never grow a steady way up, but it requires a concentrated approach of investor attention and proximity to the local markets in order to help them support along these, let's say, growth trajectories in their markets. When we compare it to the last 10 years, the markets of European tech have matured quite a bit. So in the early days, you had growth investing, which was one particular flavor. Now you see, let's say, a scala of growth nuances within the ecosystem. That means that it creates opportunities for also secondary investments, early DPI of early stage investors, but also the entire ecosystem surrounding it, on how to guide and support go-to-market models, how to guide companies with respect to corporate finance advice, for example, which has matured quite a bit in Europe, which was lagging compared to the US. The growth stage in Europe is particularly interesting because we see that the flywheel now starts to kick in. So it's all about the continuous inflow of new early stage innovation. Again, this flywheel effect of founders that have been working in prior unicorn scale-ups that now have their second or third generation scale-ups that they currently work for, and incorporate these learning effects in making these businesses scale more efficiently, and also with a higher, output likelihood, given the probability of success over the years in the maturing landscape is increasing. European ecosystem in terms of tech investments is a fairly resilient one, driven by the focus of more capital efficient growth, so more sustainable growth over time. Second is it's one of the dominant factors that is creating employment across the European region, and so creates a training for a large amount of the workforce to again work in innovative startups and scale-ups. So when we look at the overall competitive landscape, there's still a funding gap to be addressed to ensure that, particularly on the early stages where we see over the years, even in the last 3 years, pretty steady inflow of seed Series A stage companies, to really address that follow-on funding stage across the Series B and C stage. To wrap up this conversation, I think I would summarize the European tech market to be fully ready to continue to be on a long-term secular growth trend, driven by the continuous inflow of, innovation, strong human capital build-up, as well as, the underfunded segment within the growth segment of the market, which makes it particularly interesting to support these long-term technology trends across software, digital health, and fintech, as well as climate tech, driving the European capital efficiency gains that we are focusing on.